watching Let's Chat.
If you haven't filed your taxes yet, you have 4 days left, and it's not too late to take advantage of some changes in the tax code to hopefully help save you a little bit of money. Our friends from Hill & Hill Financial, good morning.
Morning, Chip.
All right, you sent this thing that says something about IRS publication 590.
Yeah.
What is publication 590?
You know, one of the things that I've discovered in the work that we do, we work with some wonderful tax preparers. We work with some CPAs, and then other people do H&R or Turbo. But we do a lot of tax planning in our firm. And one of the things that often gets overlooked is we're trying to do all the preparation, hit that April 15th deadline. A lot of folks have no idea about tax planning, and that's where IRS publication 590 comes in. What happens is in the tax code, Chip, I think there are thousands. Last time I heard of like 17,000 pages. This is about 100 to 200 pages within that code that gives guidance to folks who have IRAs, 401ks, 403bs, all those retirement plans. And it's really important as you pass money to those you love.
Has anyone ever sat down and read the IRS tax code, start to finish?
I give my greatest sympathies for anyone who has, because I go into our CPA's office and all the leather-bound books, and it's just, there's so much to know. But this one little section often gets overlooked because how money passes from spouse to spouse with your IRA, your 401k, it's radically different if it's what's called a non-spouse, how the kids will receive that money. And the implications are pretty huge. Up on the screen, if the management of the passing of money at death from a spouse to a spouse, then to a non-spouse, if it's not handled properly, it can result in the triggering of a taxation on that entire account that could be as much as 100% of the account, all at ordinary income tax rates for those who would receive the money. And then we have people, Chip, that would say, well, you know, I inherited this IRA from my mom or my dad, I'm the son or the daughter. I don't need to start taking any distributions out of it because I'm not 70 and a half yet. What they fail to realize is the IRS makes them start taking those distributions by the December 31st of the year following their death, regardless of age.
What's the biggest mistake a lot of folks make when it comes to tax planning? Or I would assume the biggest mistake is not doing any tax planning.
Yeah,
but
you know, you're exactly right.
Give us an example of one thing that a lot of people glaringly overlook.
One of the things that we have seen, especially with the passing of the new tax law in 2018, is qualified charitable distributions, or QCDs. Now what you can do, and it's been around for a few years, but it's becoming more prevalent now, is how you can take money from your IRA, and instead of taking that as a mandatory distribution, you can send it straight to your charity, to your church, synagogue, civic organization. And most people are going, I didn't realize that I could do that and avoid having that money come to me and pay ordinary income tax on it. That's a big one.
But that has to come to you before you distribute it to the charity of choice.
Yeah, and now based on the changes in the code, it's been around for a few years, but these qualified charitable distributions now have become more the mainstream, and instead of it coming to me first paying taxes, and then I donate, I can donate directly without it coming to me, and I can avoid paying ordinary income tax on that.
So you don't take the bite on that?
I don't take the bite. It's called a qualified charitable distribution, very, very prevalent. And then one of the others, as far as long-term planning, is really about how money passes to those you love and those you leave behind. And one of the things that we see is if it doesn't get handled properly, it could result in taxation of the whole account, or it could result in up to a 50% penalty for what you should have taken, but you didn't.
Half.
50% of that number could be huge, Chip.
Yeah,
and a lot of folks go, why doesn't anyone tell me this? And it's one of these, remember as a kid, you know, hot potato, you know, when you know, I don't want to be left with, you know, the one holding the bag.
Right.
Well, many times financial industries says, well, consult your tax professional. Well, a lot of tax professionals are more focused on preparation than planning. And they say, well, why don't you talk to your estate lawyer or your attorney? And a lot of people may have gone to, you know, a do-it-yourself route. So no one gets this information, and it could be a huge help if they did.
A lot of people think, I don't make that kind of money. I don't make enough to justify a financial planner or a tax attorney or any other sort of financial advisor. But that's where they're wrong.
We would like to think that everybody at all sorts of levels, rather than, well, this is something for people who have this much money. We see that, you know, money is money, and if it's hard earned, you want to make sure that those you love get it, not those you don't. So we encourage people, whether they come to see us or talk with anyone, that they get information like this so they not only do good preparation to avoid that tax bill every year, but they also make sure that those they love don't get hit with a tax bill later.
One related but very similar, very separate question. What's the biggest mistake folks make in dealing with the IRS? If you had to sum it up into 15 seconds or less.
I would just share this. Keeping good records and keeping good notes. Many times we will often delegate that out, perhaps to just a great CPA. We work with a number of them. But if you run into any issues, keeping good notes, keeping good records, and also one of the biggest mistakes that we see, because we deal with a lot of folks over certain ages as they retire, the IRS will only communicate with you in writing.
Yeah.
If they call you up on the phone,
it's a scam.
It's a scam, and just hang up, because they will not, they never have communicated.
We got to leave it there. Thank you very much. But
Always
again,
a pleasure.
What he said is very important. The IRS will not call you. Check out Hill & Hill Financial. You can find them on Lee Highway and on the web, hillandhillfinancial.com. Stick around. We have much more of Let's Chat right after this.